And for today's business matters, the Federal Aviation Administration has agreed to use SpaceX's Starlink internet system to upgrade information technology networks. Now, SpaceX is a privately held company greatly dependent on federal contracts, primarily from NASA. Starlink satellite internet provides service for government and private customers around the world. The contract comes while SpaceX CEO Elon Musk is leading efforts to make deep cuts in federal government spending, including staffing cuts at the FAA. Details of the SpaceX contract were not revealed. And while major companies have recently scrapped diversity initiatives, Apple shareholders have voted to keep DEI policies in place. Conservative group the National Center for Public Policy Research submitted a proposal to cut the Diversity, Equity, and Inclusion program. Supporters of the proposal argue that recent legal changes mean Apple would see an increase in discrimination cases. Apple said it has oversight in place to avoid legal risk and that the proposal inappropriately restricted management. Now, if it were up to President Trump, the Keystone XL oil pipeline would already be built, and now he's trying to make it happen. In a social media post, Trump urged the company that was building the pipeline to come back. He said there would be easy approvals and an almost immediate start. The $9 billion controversial project was first proposed in 2008 to bring 830,000 barrels of oil per day from Canada to the U.S. It was halted in 2021 when former President Joe Biden pulled a key permit for the U.S. stretch of the project. The company that was working on the project said that in an email that it has moved on. The Trump administration recently released its America First investment policy, the entirety of which aims at combating the Chinese regime and its military. NTD's Washington correspondent Jack Bradley has the details.
The Trump administration's new foreign investment policy aims at countering China and the regime's military. The White House says it will accommodate foreign investors in proportion to how much they distance themselves from the Chinese Communist Party and other U.S. adversaries, including Russia, Iran, and North Korea. The White House says that the Chinese Communist Party invests in American companies to obtain its technology and equip China's military. These fines go straight to the Chinese military. That's because Chinese law requires Chinese civilian companies to support its military and intelligence. So the Trump administration plans on using, quote, all necessary legal instruments to stop Chinese agents from investing in U.S. technology, healthcare, agriculture, energy, among other areas. Now, there's another side to this. The U.S. also says it will work to prevent U.S. companies from investing in the Chinese military civil fusion. Now, that means new restrictions are coming to U.S. companies that seek to invest in China's semiconductors, AI, aerospace, advanced manufacturing, among other sectors that could contribute to its militaries, all of which is aimed to increase funding in the U.S. and discourage investments in the CCP. And it seems to be working. Apple said on Monday it would invest $500 billion in 4 years to fund an AI server factory in Texas. The factory is expected to create 20,000 new jobs. Many of Apple's products are made in China and face an added 10% tariff imposed by President Trump earlier this month. On Truth Social, Trump thanked Apple and its CEO Tim Cook, saying the move reflects the company's faith in his administration. Now, this comes as Chinese leader Xi Jinping spoke with Russian President Vladimir Putin over the phone recently. The U.S. is working to quickly resolve the Russia-Ukraine war, now entering its third year. That's after President Trump spoke with Putin late last week, pledging to strengthen their country's relationship. On the campaign trail, Trump said that U.S. policies of isolating Russia and sanctioning oil following the country's invasion of Ukraine made Russia more reliant on China's economy.
He said the one thing you never want to happen is you never want Russia and China uniting. We united them because of the oil. I'm going to have to ununite them, and I think I can do that too. And they're natural enemies because Russia has massive land and China needs it.
Now, the U.S.'s work to resolve this war is sparking speculation that the Trump administration may shift its focus to countering threats from communist China. Reporting from Washington, D.C., Jack Bradley, NTD News.
Meanwhile, the FDA hit with another lawsuit over popular weight loss and diabetes drugs, this time over for Novo Nordisk, Wegovy, and Ozempic. The U.S. Food and Drug Administration pulled the treatments from the shortage list last week. Drug compounders who mix or alter ingredients to make medications are now suing. They claim that the FDA's funding for the decision was arbitrary. The finding rather. The FDA is also facing a similar lawsuit over Eli Lilly's rival weight loss and diabetes drugs, Zepbound and Mounjaro. This is also over the fact that compounding pharmacies are also allowed to make and sell large amounts of brand name medicines only if they are in short supply. The FDA declined to comment on the lawsuit. And changing track, Denny's is adding an egg surcharge at some of its locations amid shortages and higher egg prices. The diner chain declined to specify the exact amount the surcharge. Denny's said in a statement, pricing decisions are being made restaurant by restaurant. Now, Denny's isn't the only restaurant attempting to cope with the egg supply shortage. Waffle House recently added a 50-cent price hike for meals that include eggs. Major retailers, including Costco and Trader Joe's, have had to take action as well, imposing limits on how many eggs one customer can buy. New York Attorney General Letitia James announced on Monday a settlement of close to $17 million with delivery platform DoorDash. The AG said the company included customer tips as part of workers' base pay. More than 60,000 New York delivery workers may be eligible for settlement payments from DoorDash. NTD Sean Marshall has the details.
The food delivery app DoorDash will pay almost $17 million to settle claims that it unfairly used customer tips to subsidize the wages of its delivery workers in New York, rather than letting drivers keep the tips on top of their guaranteed pay, Attorney General Letitia James said Monday. Between May 2017 and September 2019, DoorDash used a guaranteed pay model that let Dashers see how much they would be paid before accepting a delivery.
Instead of giving workers the full tips that they rightfully deserved, DoorDash used the customer tips to subsidize the base pay that they had already guaranteed workers. It was basically a bait and switch where customers thought they were supporting delivery workers, but instead they were subsidizing DoorDash instead.
The New York Attorney General explained the tipping issue in simplified terms in an X account posting that said, "Here's an example of DoorDash's bait and switch. If DoorDash guaranteed a worker $10 and a customer tipped $3, that worker was paid only $10, with DoorDash using the tip to meet its guaranteed pay. DoorDash's deceptive model tricked our workers to line its own pockets."
Thank you so much to the entire team, to everybody that has worked, to the AG for delivering this landmark settlement that really puts $16.75 million into the pockets of hardworking deliveristas whose income was stolen by DoorDash.
DoorDash workers who made deliveries between May 2017 and September 2019 in New York are eligible for the settlement money. They'll be contacted by a settlement administrator with information about how to file a claim, and DoorDash must pay up to $1 million in settlement administrator costs, in addition to the restitution. In a statement, DoorDash said, "While we believe that our practices properly represented how Dashers were paid during this period, we are pleased to have resolved this years-old matter and look forward to continuing to offer a flexible way for millions of people to reach their financial goals." The company said the old pay model is no longer in use. Sean Marshall, NTD News.
Millions in jackpots are now being investigated in Texas. Governor Greg Abbott has directed the Texas Rangers to look into 2 jackpots involving virtual ticket sales. This includes an $83 million prize from this month and a $95 million prize won 3 years ago by a group of investors. Lottery tickets may be bought virtually in Texas using firms known as lottery courier services. Lawmakers are blasting the Texas Lottery Commission for failing to regulate lottery couriers. Critics argue the practice makes it impossible to verify buyers and is vulnerable to money laundering. It's the final stitch for Joann crafters and its stores. After 8 decades, the fabric and craft retailer is going out of business and closing all of its locations. For generations, Joann was the destination for quilters, knitters, and craft lovers. But last month, it filed for bankruptcy for a second time in a year. The retailer reported sluggish demand and inventory shortages. In a statement on its website, Joann said its leadership made every possible effort to keep the company in business. Joann said dates for store closures or changes to the website would be soon posted as early as possible. And the outlook for China's property sector has turned gloomier. This according to 10 analysts polled from February 12th to 24th. Home prices were expected to drop at a faster pace this year than previously estimated. Analysts expect China's property market will take a long time to stabilize. It's due in part to long-term population decline in China. And at its peak in 2021, China's property sector accounted for around a quarter of the economy. Last year, Beijing took unprecedented steps in an effort to stabilize the crisis-stricken property sector, including urging local authorities to purchase unsold homes from heavily indebted developers. But these key measures had little impact. Analysts projected a 2.5% decline in home prices this year, and property sales were expected to shrink 5.7%. Unilever surprised investors by ousting its chief executive officer today. His replacement has already been named. Here's more.
Unilever's chief executive Heinz Schumacher will step down after less than 2 years in the job. The Ben & Jerry's and Dove soap owner made the surprise announcement Tuesday. His departure comes just weeks after the firm announced underwhelming full-year earnings. Schumacher had reset the group's strategy to address years of underperformance. He also laid out cost cuts last year, including separating its ice cream division and cutting thousands of jobs. The consumer goods giant faces pressure from investors to revive its fortunes. Unilever chairman Ian Meakins said the board was pleased with the company's performance last year, but has much further to go to deliver best-in-class results. Schumacher is due to be replaced by finance chief Fernando Fernandez. Meakins said the board was impressed by Fernandez's decisive and results-oriented approach. Unilever, which also owns Magnum and Hellmann's mayonnaise, made no change to this year's outlook, and the board said it was committed to further accelerating Schumacher's growth plan. Schumacher will step down in March and leave the company on May 31st. Unilever said he is leaving by mutual agreement. The CEO's surprise departure hit Unilever's shares, which fell 2% on Tuesday. They had gained more than 9% since Schumacher took over.
Meanwhile, Vietnam is in a highly vulnerable position over reciprocal U.S. tariffs based on public data. Goods exported to the U.S. accounted for 30% of the nation's gross domestic product last year. By comparison, China and Japan's exports to the U.S. account for around 3%. A number of U.S. corporations made investments in Vietnam during Trump's first administration. Its booming exports combined with its limited imports from the U.S. could make it stand out for potential reciprocal tariffs. To help dodge tariffs, Vietnamese officials have flagged some measures, including compromising on unequal duties and possibly purchasing U.S. liquefied natural gas. And Home Depot has broken its long losing streak. On Tuesday, the company said sales at stores open at least a year grew 0.8% last year. That ends 8 straight quarters of declining sales. The company also gave an upbeat forecast for 2025, saying sales at stores open at least a year would grow by 1%. It could be good news for more than just Home Depot. The company is America's largest home improvement retailer and is considered a bellwether of the U.S. housing market and economy. And according to several recent surveys, many Americans are worried about their wallets. The Conference Board's Consumer Confidence Index was down for its 3rd consecutive month in February. The National Federation of Independent Businesses Uncertainty Index increased in January to the 3rd highest rating in its history. And a new survey from Wells Fargo shows roughly 75% of adults and teens say they plan on cutting back on spending due to economic worries. And as well, Nippon Steel plans to use its current merger agreement for U.S. Steel as a starting point for talks with the U.S. government. Here's more.
Japan's Nippon Steel has a plan to get talks going with the US government. Company president Tadashi Imai said Tuesday his firm could use its current merger agreement to buy US Steel as a starting point for discussions as it tries to revive the deal. Earlier this month, US President Donald Trump said Nippon's bid for US Steel would take the form of an investment instead of a purchase. He made the announcement alongside Japanese Prime Minister Shigeru Ishiba at the Oval Office. Trump also said he wouldn't mind if Nippon took a minority stake in US Steel. The bid was previously blocked by former President Joe Biden. Imai said the current merger agreement will serve as a starting point for discussions with the US government. He added the firm will talk with the US government ahead of how it can get Trump's approval. Nippon is the world's fourth biggest steelmaker and bid for US Steel in December 2023. It promised billions of dollars in investment to revamp its aging infrastructure. The company also pledged to keep its headquarters in Pittsburgh, Pennsylvania. The deal faced political headwinds from the start as both Trump and Biden vowed to stop the deal. The Biden administration ultimately halted it over national security concerns. In January, the steelmakers asked the courts to reject the block.
E-cigarette companies are changing their corporate structures amid scrutiny from the Food and Drug Administration, complicating efforts to get their products off the streets. A Chinese vape giant moved operations to a British Virgin Islands company from the U.S., but the company's unauthorized Lost Mary vapes are still widely available on America's streets. A company spokesperson said it has exited the U.S. market and is not sidestepping authorities. A Texas firm, Ludicrous Distro, dumped its Isco Bars brand after the FDA banned it and now acts as a distributor for devices from third parties. Ludicrous Distro didn't explain its change in business strategy, but says it seeks to comply with FDA policies. The FDA says it's aware of such practices and is monitoring the situation without naming specific companies. Land and sea all in one. An Egyptian man has combined driving with sailing in a new watery vehicle that's produced locally and sold globally. Here's more.
It's a boat, it's a car, it's Jet Car Chrome, a car-shaped vehicle made for the water. It started as a small project for Egyptian entrepreneur Carmen Amin.
Even the people closest to us don't believe our products are Egyptian. Egyptian-made, all handmade.
Amin launched the company 6 years ago with a budget of $50,000. Now he says it's worth $5 million and he sells his cars around the globe.
We export to 70 countries, the largest of which is the U.S., and to Canada and countries in Europe like Spain, France, Greece, and Cyprus. Basically all the coastal countries.
In all, Amin says he's manufactured 950 cars. The vehicles are manufactured on demand at a large factory in Giza. Most of the parts are made locally. Only the engines are imported from Japan and modified based on customer requests. One Jet car costs between $20,000 and $40,000 depending on options. The car is highly customizable from color to shape. Manufacturing takes about 3 weeks to complete. While Amin is proud to see the cars driven all over the world, he's especially proud to see the vehicles hit local waterways.
It's a good feeling, of course, to have a locally made car to drive in the Nile and in all our waters. The Red Sea and the Mediterranean Sea. It's a good feeling, like it's driving in its own territory. It's the car's home country.
Okay, now on to Wall Street. Major indexes were lower today, and that's with the tech-heavy Nasdaq hitting a 6-week low. And all this coming as Treasury yields tumbled on signs of softening U.S. growth and uncertainty over Trump administration policies. Now, over in Europe, Germany's election result buoyed the euro and European shares actually closed up. Meanwhile, negative surprises here in the United States. Economic data have accelerated this month, and this is led by some unwelcome pickups in things like consumer inflation expectation, that's one, and more recently by a drop in overall business activity. All right, with that, all on today's Business Matters.